Welcome to the tradingmentors.com and welcome to the QuantFlow Dynamics Software. I'm going to cover that in the next few minutes. I've done a blog in the Trading Mentors website under technical analysis covering the QuantFlow Dynamics 2-hour chart, which seems very popular for many of the VIP members. So I've got a special offer and I'll cover this in the next few minutes, but we've got free signals for 1 year, gives you clearly 1 year signals for £600 free. Free VIP membership where I give you daily updates worth £360 and free reversal charts worth £197 with free updates. So if you're interested in that, then just go to the tradingmentors.com /shop and it gives you all the information that you need. So welcome to the QuantFlow Dynamics software with reversal charts. I'll cover these in the next few minutes, and if you have any questions, please let me know. We've got a lot of questions coming in on the 2-hour chart, how to use them, why it works so well, and how to put in your entry points, your stop loss and your targets. They're specific questions that have come in, and I'll cover those in the next few minutes. This is the pound yen. It works on any asset on any time frame. So I've got a 2-hour chart versus a 1-hour chart. With the reversal system, I use the 4-hour chart and the 1-hour as a combination, but you can choose whatever you wish. What I would say, if you're looking for continuation patterns, i.e. a trend upwards or a trend downwards, you don't want to be too far away. So the 2-hour and the 1-hour, or the 4-hour and the 2-hour, are good combinations, or the 1-hour and the 30-minute are a good combination. So you're with the market and you're live. Now with the entry point on the chart on the right, the 1-hour chart, you need to make sure that you're in live on the market. Heikin Ashi charts won't give you the live price. I want to see the noise. I want to see the action. So flick the Heikin Ashi charts off on the entry points. So let's go through it. The QuantFlow Dynamics software is a Pine script code, and you just copy and paste into this and add it to your chart, and you don't need any other indicators. I do have other indicators on here, but they're not absolutely essential to get the success that you deserve. What I do have on here, as you can see, the black lines, they are 50-day moving averages. I've been using the 50-day moving average since 1982 in stocks, and then since forex in the 90s because it's so reliable. And of course, before computers, 1982, before computers, we had no way of working out. So we had to work out what the average price was manually and then draw the 50-day moving average onto the chart. Those were the days. Technology is much better now, much easier to trade. So the 50-day moving average, it acts as support or it acts as resistance. So once the price moves below the 50, then it's weak. Once it moves above the 50, then it's strong. That's the first thing that we talk about over and over again for many, many years. What this does, this measures a strong trend, it measures pullbacks, and it gives you additional opportunities throughout the day. So you don't have to beat a chart all day. There's always opportunities throughout the day. One of the biggest problems most traders have, in fact I guess all traders have, you don't want to be sitting at a chart all day long. That's definitely not what I want to do. I like to play golf and do other things, go to the sauna, walk my dogs, whatever I'm doing. I prefer to be doing that than staring at a chart all day. So you can actually specify time of day, high volume days. New York is a good time because there's high volume, or London Open if that suits you. So let's go through it. So this is the pound yen. Whenever the price moves above the 50, then we are looking for buys only. And we want to see both charts in tandem, don't we? So in other words, I want to see that the 2-hour chart agrees with the 1-hour chart. Okay, so the price above the 50. Now I want to see a gap. I want to see the price. I don't want to see the price in the middle. It's no good to me because they could be acting as resistance, which makes sense. before it goes down. Now this is, if you look on the left, you've got a tool here with a buy power of 81. It's very, very strong actually, and you can, using the reversal charts, you can use this as your entry. However, this is not what we're talking about. We're not talking about the reversal charts. We're talking about the continuation pattern within a strong trend. Okay, so once we have the break, once we have the buy signal on the left, we want to see that the 1 hour chart agrees with that situation. Now at the point of entry, what I'm looking for is a buying opportunity. And what I can actually do is use these tools to actually confirm that it's all green and all buyers are in. But also I can actually wait for the price to move down, not necessarily the price, but the oscillator to move down into a situation where it's oversold here, 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 and so on. So you've got plenty of opportunities throughout this journey to actually get into the trade at the right time. Now, if you don't want to be bothered with that, fine, just get in here. Your entry price will depend on where you get in, of course, if you're not using the oscillator. And so you might want to wait for that price to come down and the oscillator to agree, and then you get in at the point here. Now I want to make sure that the price remains above the 50 moving average. My stop loss will always be below the 50 moving average. Okay, because if it's going to change again, the trend, then that's the end of the trade anyway. And I've done my best to make sure that I've got into a position where it's highly probable, we're talking about probabilities here, that the price is going to move much, much higher. Now if we have a look at this situation here, if we entered here, we have 2.85 risk to reward, but we only want 2 times, don't we? We only want 2 times. Now, hindsight's wonderful. We could say, well, we could have got there 237 pips, and we could have had 3.42, but we don't know that it's going to do that. So we have to think logically, where is the safe place to actually put our target, and 2 times is reasonable. Now, if you are going to get in at the top of that position, that's still fine, by the way. And you can actually use the bottom of that green line, okay, if you want to be a bit more aggressive, to actually say, right, okay, I've got a support line here at 211.18, and I'm going to put my stop there at the very top there. I've got it in here, and I only want 2 to 1. Now, if you put your stop below the 50, which is less aggressive, of course, you're allowing the market to do whatever it wants to do, then of course you can go for 1.5, but 2 times is always recommended in order to make sure that your success is more successful, because you want to make the most of those moves when they actually happen. Hopefully that makes sense. Again, write notes down if you have any questions. Please let me know. It's really, really important to me that you are successful and these situations work for you. Now let's have a good look at a short position therefore. So we can do exactly the same thing, but the opposite, can't we? So we can see that we had a sell signal here, but at that time it was above the 50 moving average. Now the 50 could at this point act as support, and then it could just do that. Okay, so once the price moves into the area of the 50 moving average, then of course we're not going to take any action. That is not a tradable event. If you do, then you're taking a much bigger risk. So let's have a look at the action in terms of the 1 hour chart, so we can actually see where the price went, where we could enter. And it's subjective as to where you enter, how aggressive you are, and whether you're looking for break of structure. Break of structure just means it's broken down in this case, or it's broken up in this case. So let's have a look at the picture here. The first thing that we see as the price moves down, it actually breaks the 50-day moving average, all 3 of these, And so therefore we're looking at continuation pattern, a very strong trend downwards. Before we actually enter the price, the QuantFlow Dynamics software already, before it's hit it, gives you the target. Okay, so if you have that target, use it, or you can go 2 to 1, totally up to you. So let's go through this. We can see that at this point here we have a breaker structure. That is what you're looking for. Now if we dial down into the oscillator, we can see that we've got plenty of opportunities to get into this position, and we can see that we have a sell signal here, we have a sell signal here, we have a sell signal here, sell signal here, sell signal here, sell signal here. So if you don't get into the position early here, you can get in here, you can get in here, 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 here. Now as the price moves down, of course the bigger the move, the chances are the price is actually going to get to your target fairly quickly, and you're going to miss that move. But it does give you opportunities to get into it. Now at this juncture here, the price moves down, we have a breaker structure, and it agrees with the left chart, the 2-hour chart as well, below both moving averages, both below the 50, which is an essential part of the resistance area. So far so good. So in this instance here, depending where you're going to get in, if you get in here at the top as it touches that 50 moving average, then you can see that actually this is very aggressive, because on the left the price has not actually broken down yet. It's not actually broken the 50. So how you want to treat that, this is a very small risk of 25 pips, by the way. So your risk is tiny compared to what your return is, 7.44 risk to reward. So again, this trading is not an exact science. It's how you interpret the charts and how you want to trade it and how you want to risk based upon your personality, isn't it, basically? Now as I do that, you can actually see it doesn't really matter where you get in, because you know where the target is, and you can actually achieve 2.33 risk to reward on the breakdown as well. So don't worry, don't be get stressed about missing the exact point. It's not, that's not what it's about. You could get in here and use this as your trailing stop, the red line. Let's get that target back to where it was. So where's the target there? So even at that point, you've got 2.45 risk to reward. At that point, you've got 3 times that. Oh no, let's bring it up. Yeah, so you've got 2.9 times risk to reward, and so on and so forth. So you want to make sure that you've got the risk that you're going to take. It measures the success that you're going to get from it, if that makes any sense. 1 to 1 at this point here, that's 1.45. If you're happy with that, 1.45 with a 90 pip target, then please do that. But the point of this is to get into the entry point on the breaker structure if you can, and maximize that profit down to target. So let's have another look at another opportunity using the QuantFlow Dynamics software. Now don't forget, you get the signals for 12 months, which is worth £600. I charge £50 a month for signals, a separate room. It's a separate room in Telegram. I don't care how many people are in it. I don't care if it's one person. I'll still send you the signal. I don't rely on YouTube revenue. I don't rely on course revenue. I trade the markets and I make no money in the markets. So let's have a look at this here now. Now this was not valid. I want to see why. Okay, so here we can see that this point here, as it rose above the 50 moving average here, we can see that this was this point here below the 50 on this side. So this is not a tradable event. Okay, it would have made money, but for us, in terms of rules, this does not count. Now if we go forward, we can see that the price fell. We had another buy signal here live in the market. If we look on the left, we can see that the price has come down into the 50 and then out of the 50. This is a common theme. It often comes down into demand, goes through it, then come back up, and that's your buying opportunity quite often. We cover that in the VIP room. So in this instance here, we can see that the price has moved up. Let's get that out of the way. And so we can actually enter position anywhere really along there. But what does the money flow say? There we go. So we can actually say that the money flow at this point is very, very low. And so the money flow is starting to come back in, and it has to move up. So we can go to the chart and say, right, this is a valid entry. Anywhere along there, along above the 50. We can use the 50 MA below there as a initial stop, because I don't want the price to break below the 50s. It acts as strong support. Now if you want to use the support line down here, that's fine as well. If you have a look at that, it just gives you the swing low just below 36, 40 pips, let's say, and then you can have your 2 to 1. Now the other thing to bear in mind at this juncture, you already have a target given to you on the software here. Okay, so let's move that along. So if I do that, you can actually see that if I go for that target, well, it would have reached that target, but that's not the point. Hindsight's wonderful, but this target has already been given to you by the software. All right, and that gives you 3.54 risk to reward. If you've got a more aggressive stop, if you want a more softer stop, then you've got 1.5. Okay, so it's a fantastic system of ensuring that you're going in the right direction at the right time, and you're going to get into the position on the money flow as it comes back into the market to get that pullback and continuation pattern for great success. Now if you want to purchase it, just go to the tradingmentors.com, go to shop, and it gives you all the choices. You can have the reversal charts and QuantFlow Dynamics Software. That's what we're talking about today. Special offer. Gold on steroids, forex and gold signals, 50 quid a month. Reversal charts, 197. You've got VIP membership, £360 a year, or you can go for the whole lot, which is very comprehensive, for $2,995. It's up to you. If you go around the website, there's lots of free stuff. We can see what's trending when it's live. It's the weekend now. We can see where the strong buys and sells are before you even open up the chart. Technical analysis we have, of course. So I've covered this, the 2-hour chart, and also there's predicted forecast for US yen and where gold is going to next, blah blah blah. So I hope you enjoyed that video, and I hope you join me on this amazing journey, and I look forward to working with you for the next 12 months.